Good morning. Welcome to Market Day Report. I'm Tony St. James. Let's jump into the markets. We're going to start with a look at the corn market. And we're trading lower here at mid-morning. September off 2.5 at 388 a bushel. New crop December 408 1/4. It's down 4.5 cents. What about soybeans? Again, year over year down over 27%, and we're lower in morning trade. Old crop at 999.5, while November trades 1013 3/4. It's down 7 3/4 cents. Let's roll through the wheat market. At least 6 consecutive closes in positive territory for the wheat market. Can we make it 7 for Chicago? Well, we're starting in negative territory. December off 9, 571 3/4. July 8 1/4 lower, 609.5. Hard red winter wheats actually closed 7 sessions higher, and December down 5 3/4, 587 1/4. July 610. It's down 6 cents, and spring wheat in Minneapolis has been higher on the July contract, but roll out to the December, that front month, 621, down 2.5. Cotton market is in higher territory, but still below 70 cents on December, 69.88, and that is 7 ticks higher. Ted Seifried's with Zaner Ag Hedge, and I've rolled the numbers out. I've set you up here perfectly. What are you watching?
It's kind of been a weird week, Tony. It seems like fairly low volume and fairly choppy trade. What had defined the week up until today had really just been a lack of seller. We've just been sort of drifting higher. Technical buyers have been coming in as we've breached some key technical resistance levels in the form of the 50-day moving average for both the corn and wheat. Soybeans have gotten close to it, but not quite gotten through it. And just a little bit of short covering. But I think that a lot of that's money flow versus lack of producer selling at the moment. Now, today we are under a little bit of pressure. Just hit a bit of a downdraft here in the last few minutes, actually. And you wonder if some of that selling is coming back in now at this point. And again, very thin sort of holiday traded markets. I think we're all just kind of waiting to see what happens with, well, harvest weather, what the combines are going to start telling us. We're looking at what's happening in Brazil. It's getting a little dry there, but in my opinion, it's too early to worry about dryness in Brazil. If it starts raining there fairly soon, they'll start getting planted in a timely fashion. But it's something we're watching. And then finally, export sales, which were normally today, will be for tomorrow. Could be a mixed bag for tomorrow. We know we've had some flash sales, but are they going to be as big as the numbers that we saw last week, specifically for soybeans? We really need some very big numbers for soybeans to continue to catch up to the USDA's target.
Ted, really, I think the underlying message here is there's a lot of conflicting signals, whether we're talking about our commodities or we're talking the economy in general.
Yeah, you're absolutely right. And I'm going to say, look, we've had a really nice bounce off the lows just in the last 5 trade sessions. I think there's a lot of producers that were saying, I wish I could sell corn, 410 again. I wish I could sell beans, 1030 again. Well, here we are. And we've got a big harvest coming up, whether it's a 54 or 53 national average yield in beans, or whether it's a 183 or a 181 in corn, still going to be a lot of bushels that need to move here in a fairly short period of time from now. And so I don't know. I think this is a bit of a gift. As far as outside market turbulence, that's not great going into an election year. I mean, things should be stout, you would think. But there's some concerns there. And while pressure on stocks might be very short-term bullish for grains as it's risk off and funds might need to cover some shorts, longer term, it's bad for demand. In particular, it's bad for demand for livestock, which means it's bad for demand for feed, which is bad for demand for grains, right? So I don't know. I think you got to look at everything as a whole. I think you got to look at this recent bounce and say, hey, that was really nice to see, and I wanted to see these prices or get back towards, better prices. I think it's time to reward the market a little bit, Tony.
The only way to really find value, though, you have to find a buyer for something you want to sell. So we'll take a break and come back and see whether or not we're finding any buyers and sellers for cash cattle. Market Day Report continues in a moment. It's Market Day Report. Well, we ended the last section by talking about buyers and sellers. That's one way we find a value for something. So are we finding some value for live cattle? Let's go to the market. We're lower at mid-morning. December live cattle trades 177.75. Down $1.15, waiting for cash cattle really to start developing this week. It's a holiday shortened week. October feeders 235.97, down $1.47. And the hog trade, again, we've seen hogs perform pretty good this year, up 8.7% year over year, but lower in morning trade, 81.25 on October, down 32, 70 lower at $72 on the December. Let's bring back in Ted Seifried with Zaner Ag Hedge. What are you watching in the proteins?
We're under a little bit of pressure. I guess it's not terribly surprising in a holiday shortened week that we haven't seen any significant cash cattle traded just yet. Maybe that'll happen today or this afternoon. In the meantime, don't look now, but the S&P and the Dow are testing the last 2 days' lows, which is actually some fairly key support. And it's early in the day, Tony. It's kind of a bad time of the day to be doing this. And you wonder if we're going to be looking at some pretty significantly lower stock markets by the end of the day. And if that's the case, well, you get a little worried about what that means for domestic demand now that we're post, Labor Day holiday sort of peak grilling demand season. And it's just not a good look for what's happening for livestock or for the cattle complex in particular. And it looks like I'd say live cattle are trying to predict that stocks are going to be down, and we're worried about demand because, we're giving back a lot of the gains from what we saw at the end of last week and early this week. Yesterday was sort of a placeholder day, but now we're sort of backing off. So not a great look. It'd be great to see some higher cash cattle trade. Box beef prices had started the week fairly all right, so maybe that's possible. But short of that, I think we're getting a little bit more concerned of what the demand picture is going to look like now that we're past the Labor Day holiday.
Yeah, Ted, with Packers now in the black, they could afford to maybe pay a little extra for cattle this week. Just to throw a bone, if you would, back to the seller side. So we'll wait and see if that develops. Ted Seifried's with Zaner Ag Hedge.